So with that, I'd like to invite our moderator, lovely Chitra, to the stage where she can introduce the panelists and start the conversation. Chitra, please. So if everybody's ready, let's take a seat. We are about to start our next panel discussion. Thank you.
Okay. Hello, good afternoon, and welcome everyone. As Shireen mentioned, my name is Chitra Rajeshwari, and I'm the principal and lead for the Global Development Practice and the Executive Director for Avasant Foundation. Let me introduce my esteemed panelists here. I'll start from the far. Raquel Moses, and she is the CEO of Caribbean Climate Change Accelerator. Welcome. And then we have no, I do have your name. I was going to say Maggie or Magdalena. Magdalena Coronel, and she is the Chief Investment Officer at the Inter-American Development Bank Lab. And we have Dale Pfeiffer, and she's the CEO of Good World. So before we get started, maybe you want to take about a minute just to talk a little bit about what your organization is about in relation to our topic of today, which is ESG. Thank you.
Absolutely. So thanks so much for having me. And as Chitra mentioned, I'm the CEO of Good World. Good World focuses on corporate philanthropy and ESG. And we focus very much on how to create ROI out of ESG investments. And we do that through a series of customer and employee engagement programs. So we started out as a nonprofit fundraising platform, and then kind of grew out into a full system ecosystem. And we work with a lot of banks and fintechs.
Thank you. Magdalena?
Great. So I'm Magdalena Coronel, Maggie Coronel. I'm Chief Investment Officer at IADB Lab, the innovation lab of the Inter-American Development Bank. The bank is the main financier of public administration in Latin America and the Caribbean. We work with 26 countries across the region. And basically, we believe that innovation can create impact. And that's our mission. We work with different type of instruments, from grants to equity investments to debt, making sure that entrepreneurs have access to financing to be able to develop innovation that can actually close the market gaps that we see in the region. It's fantastic to be here. It's fantastic to be in a panel all women. So very excited.
Thank you.
Hi, I'm Raquel Moses. I'm the CEO of the Caribbean Climate Smart Accelerator. I'm not trying to accelerate climate change. And so, but what we do, we're a coalition of 28 countries working on climate action together. All of us are Caribbean countries, and so we don't have scale working alone. So by working together, we can create economies of scale. What we do specifically at the accelerator is not a traditional accelerator. We're not incubating businesses. We are bringing together public sector with private sector, with conglomerates usually, to put deals together. So for example, things like climate smart agriculture. So where a country wants to lessen their food import bill and wants to grow more of their own food, we bring technology and innovation with an entrepreneur and potentially a private sector partner, and then we make that deal happen. Sometimes we create blended financial instruments, sometimes we bring philanthropy to the table to unlock potential of deals, but those are the kinds of things that we do across the Caribbean region.
Thank you. So apart from this being the only women panel, it's also interesting to know that we are a small United Nations here. We have Raquel from Trinidad and Tobago. Magdalena is from Uruguay. She's from New Zealand. Dale, and I'm originally from India, but living here in the US. So here we go, a very diverse panel. All right, so what is interesting for us at Avasant is we're getting into the ESG space as well. You know, it's like People got into the green, then it became sustainable, then innovation. Now it's all about ESG. And so this is a big focus for us for this year. So I'm going to learn a lot from the three of you in the next 34 minutes that we have. So one of the things I've noticed is that growing concerns about the impact of climate change and socioeconomic disparity have made environmental, social, and governance, of course ESG, a front burner issue. The benefits of proactively addressing ESG issues go beyond appeasing institutional shareholders and creating a good public relations story. So this is all we know, right? ESG is, as a term, is broader than CSR. Again, a lot of people confuse the two, but it's definitely two different tracks. A vigorous ESG program can open up access to large pools of capital, build a strong corporate brand, promote sustainable growth, improve operational efficiency. The workers and employees are more satisfied and overall benefits the companies and investors. So in the rapidly evolving market, ESG is an economic imperative for the companies. So what we're going to do today is this panel will focus on how leading companies and regions are showing leadership in furthering sustainable goals. So panelists, I'm going to throw out the question and any of you can start. So why is sustainability one of the most critical business imperatives today? Who would like to take that?
I can start if you like. Yeah.
All right, go for it.
I think we can all answer all of the questions. So, I mean, I think it is the right thing to do, and I think as people, we know that this is the right thing to do, and I think that personally drives a lot of executives. But really, I think, there was a really interesting study that just came out from Signal AI that showed that 92% of CEOs are worried about ESG. Mm-hmm. Why is that? It's about corporate reputation. So much of the value of a company is staked on corporate reputation. The data shows about a third of it. And guess what? ESG disclosures are just about to start happening. The ESG regulations are just about to come out. And companies are going to have to show how much they really care about climate change. I recently read a Harvard study that said 73% of consumers would not buy from a company who doesn't care about the planet. So, it really will start to impact people on the bottom line. Alternatively, 87% of people who, if a company advocates for an issue that they care about, they will shop with that brand. So it's really going to affect consumer behavior through the reputation of the company.
And what I would add to that, I think that's a terrific point, is the fact that we have been seeing better returns in diverse teams, right? So the other side of the ESG is diversity. And when you're seeing companies that have better returns when they have diverse teams, that's talking to investors. I'm talking from an investor perspective. Everything we do has to have a direct or indirect impact in poor and vulnerable populations, climate change, diversity, and closing gender gap. 60% of what we do has to have a clear direct impact in these kind of issues that we are having in Latin America and the Caribbean and worldwide. So when you have different stakeholders of your company actually asking for the same, you have the customers, you have your investors, and you have the whole public talking about these topics, this can become a key issue in the business development of any company.
Yeah, and even in the last panel, they were talking about the fact that, attracting employees and employee retention and keeping employees. ESG impacts that as well. People want to have purpose in their work. Young people who are now coming into employment, they don't care about the shareholders having a return. They care about doing something that's meaningful. And companies, through their ESG, can demonstrate that they're doing meaningful work and make people feel a sense of purpose in the work that they're doing. And that's a part of your retention, that's a part of attracting the best talent. So ESG impacts and when you have engaged employees, they're the ones who are going to work and they're going to stay, and it's going to increase your profitability as a company.
Right, so that's a good segue for my next question then. So how can ESG drive the triple bottom line? Maybe Magdalena, you want to start with that?
I believe when we're in what I was mentioning, when you're talking about companies and like there's results, there's metric that shows that there's more return on when you have companies thinking about ESG. That's something huge. As an investor, we have been including ESG in each one of the screenings that we do in terms of the opportunities and the investments that we do. We analyze thousands of companies each year. One of the metrics that we analyze in that screening is ESG. It's what's the kind of impact that this company is generating, what is the impact socially, what is the impact environmentally, and this is key for the selection of the investments that we do. When we already have a company in the portfolio, we analyze the financial return, but we also analyze how they are performing towards the metrics that we determine that would be actually going into impact, measuring impact. So for example, and this is totally anecdotal, we have different flags regarding each one of our investments. We have red flags, we have green flags, but we have a green plus now that is basically related to if the company is creating more impact that is what it's supposed to do. If the company is overachieving not only financial returns, but specifically impact returns. So I think that talks to the level of importance that ESG has.
Right, so Raquel, do you see this in your line? Sorry, do you see this in your line of work?
Absolutely. So, for example, who attended the session earlier with the CFO of CEMEX, for example? Mm-hmm. Not many of you. It was excellent. You guys missed a good one. So, but, you know, we are pursuing a deal with them now that they are really excited about. And the cement, the construction industry is one of the biggest emitters of carbon globally. However, we are working on with an entrepreneur that is converting waste plastic into a resin that strengthens concrete. And if you know the Caribbean, you know, we have storms. Our company was formed after Hurricanes Irma and Maria, where huge parts of the Caribbean were destroyed. Dominica lost the equivalent of 226% of their GDP in a single event. And so you don't recover from that in a year. You don't recover from that in a decade. You know, and so they are fighting their way back. So we have to build stronger. We have to build smarter. And so by finding ways to use waste plastic to strengthen cement, it improves the way that we build. It helps us to get rid of plastic. And those are the kinds of things that we're seeing, is that the future belongs to the people who are willing to innovate their way out of this problem. So absolutely, it's about profit, but it's about people, it's about planet. And you have to, if you're playing the long game, if your business is in business, not just for the next quarter or for the next year, but for the next decade, and unfortunately when we listen to IPCC reports, we're not talking about, 50 years anymore, we're talking about 5 and 10 and 15. If you are playing the long game and you want to ESG needs to be at the front of what you're thinking about. It just makes business sense.
It's so true what you're saying, because the SDG goals, when they were set up, they said, 2030 is so far away. We are into 2022. And we barely have 7-8 years to achieve so much. And we've barely scratched the surface. So go ahead, Dale.
Just going back to the question about ROI, because, we work with... so I think right now, where we're at with ESG with so many companies is about measurement. We have to get our arms around measurement, where are we with DEI, where are we with carbon emissions, all that sort of stuff. So it's about measurement. The next step then is reporting. How do we report that? How do we communicate that to all of our various constituents? The step after that is engagement. How do we powerfully engage our investors? How do we powerfully engage customers? How do we powerfully engage employees in an experience that you can together be working on these goals? And I'll just give you a quick example, and that's when the ROI really, really kicks in. It kicks in terms of customer loyalty, recruitment and retention, like people love working for those brands, and also attracting investment. And just one very quick example of that. So MasterCard is one of our big clients, and we help them with the Priceless Planet Coalition, which is a coalition of 40 companies. And we did like a Christmas card campaign with these 40 companies where executives sent Christmas cards out to all of their employees that planted a tree. 75% of those employees, and each of those cards cost $1. It cost $1 to plant a tree. The employees then, 75% of the employees redeemed them, and then they were asked if they wanted to chip in. The average donation across all of those people was $5 over the fact. So the investment from the company was $1, and then the people gave on average $5. Some people gave $100, some people gave nothing. And that's how you exponentially increase the amount of money that a company has for ESG by really providing these really meaningful engagement points where an employee can feel like, okay, we are working together on climate change. A customer can feel that way as well. And that's when, those parties start to open up their checkbooks as well, and that can be counted inside of ESG budgets.
That's very true.
If I may, I think also, and to your point, it actually increased the attractiveness of a business, right? If you're talking about public markets, it's going to be way more interesting for shareholders. But talking about private sector, you're talking about you're going to be more attractive to investors, but you're also going to be more attractive to an M&A opportunity. So this actually is affecting the whole development of business worldwide.
That was a perfect segue for my next question. You're reading my mind here. So how can private and public sectors, there you go, leverage technology to achieve ESG goals? Why don't you take it, since you're on a roll here?
Sure. So in the lab, we basically work with technology, we work with innovation. We believe innovation is going to be the key to create impact that will close the gaps that we have in healthcare, education, workforce in Latin America and the Caribbean. Therefore, we work a lot. We work mostly with venture capital, with the venture capital industry. We invest in venture capital funds, and we request from these venture capital funds to have measurements around impact. But we also invest directly, and we ask for these startups to also report impact. And one of the points that Dale said earlier, and I think is a key challenge for the industry right now, is how do you measure that impact? So we can put more investing into business that have ESG, business that create impact, but how are we going to measure that information, and what are we going to do with that information is the next step.
Yeah, and Dale was talking earlier about the tree planting, for example. And what we see is, in tree planting, there's a lot of failure. But you have to plant the trees, because if you don't plant the trees, we are essentially giving up. And we're seeing amazing stuff with blockchain. Using blockchain to look at deforestation, using blockchain to manage things like tree replanting to see how many of them survive. Blockchain over satellite imagery to look at all sorts of overfishing and protecting marine protected areas. So we are overjoyed. I mean, the Industrial Revolution kind of got us into this mess, but I really feel like the digital revolution will get us out of it if we just allow the technology to take us in the direction of finding solutions. And I think a lot of people are too willing to kind of sit back and be Blockbuster when you want to be Netflix. I mean, there is an opportunity here. According to Morgan Stanley, we need to spend over $80 trillion just to keep the commitments that we've already made. And the commitments that we've made will not close the gap, by the way. But we're not throwing that money into the air and making it rain. Somebody is going to be paid that $80 trillion to solve these problems. Do you want to be on the side of the company that's losing customers and losing employees because you don't have a purpose? Or do you want to be on the side of cashing in on this opportunity that exists to create the new transition, to create the new world that we need to have in order to have a habitable planet?
Dale, you had something to say?
I mean, that is just so well said. And I almost don't want to say anything to destroy the point. I just think there is so much opportunity. The way that companies are measuring environmental, like carbon outputs right now is very basic. It's self-reporting. It's based on the number of offices they have, executive travel and everything. So it's not, I think there is a lot of opportunity to get to where we need to go, thinking of the Netflix rather than the Blockbuster.
Yeah. So you all touched, all three of you touched a little bit about the metrics and reporting. So how important it is for organizations to start showing their ESG measurements? Do they do it in their annual report? Should they submit a separate report? Because when CSR reporting came to be way back 5, 6, 7, 8, 10 years ago, people were reporting it separately. More and more organizations are trying to embed CSR part of the annual report. So how do you see ESG being reported? And what are the metrics that they should actually measure? Because ESG covers, of course, a lot of us talk about climate, which is part of the environment, but there's also the social aspect of it and then the governance side of it. So you want to talk a little bit about it?
Sure. So we ask our investees to report at least once a year. We're moving to twice a year. We have one report, financial and impact. And we also need to be cautious that not all the companies will be reaching out milestones in the E, the S, and the G, right? There's companies that will be working more on the E, there's companies that will have a better performance on the G. So first of all, it's hard to have a standard measurements for different type of business. What we do is when we analyze the company, when we are in the due diligence process, we determine which kind of indicators we want to see from that company. And again, we went from annual, we are going to semestral right now. We want to see financial, we see financial and impact at the same time. And what I would say is we are also changing the way we are screening companies. In the case of the funds, we are incorporating a requirement to have women on a governance body. It's part of the requirement to receive investment from us. And with that, several other different changes.
So, go ahead.
I mean, I'll just answer very quickly. When you talk about E, it's like carbon is the big one, but there's all sorts of other ones like, waste, disposal of waste, and then there's, there is a whole range. I think with DEI, it's a lot around like executive pay, a woman across like gender and racial and, sexual orientation categories as pay fair. A lot of our corporate philanthropy, and it's all about making it more inclusive. A lot of the corporate philanthropy we do, we really dig into the data to see who is giving, who's taking advantages of the opportunities, if there's certain groups of people who aren't, why is that, and try to take a very inclusive approach, a bottom-up approach, to make sure everybody's interest is represented in these programs and there's access points for everybody who want to get engaged. And it's really very simple, it's almost as easy as asking a question and really like listening and wanting the feedback.
I actually have a very controversial position on this one. I think that ESG reporting is going to become obsolete. In the same way that Kevin was talking this morning about everybody used to be a .com, now you're just a company. I think ESG reporting is just going to be subsumed into reporting. It is going to be an expected part of reporting that you are reporting on ESG as often as you report. And I think the important piece is putting in the systems to be able to collect the data so that you have so it wouldn't matter whether it's quarterly, monthly, daily, whatever it is, you have to, if it's not ingrained in how you do business, you're not going to be able to report on it, and you're going to find yourself scrambling to collect data to make a point, versus this has to be a part of how you do business. Right. Otherwise, you will be the dinosaur.
Yeah. And exactly, I think like ESG is part of mainstream right now, right? If you're
SEC
not
is requiring ESG reporting.
Yeah.
Yeah. No, that's it. I'm just saying that it's no longer, it's not going to be some separate thing. It is going to be, if you're not reporting on ESG as a part of your reporting, then you're not filing a complete report. You're not reporting on all of what is happening within your business.
What I would say is where we have been working the most, we do investments in early stage startups, is helping the SMEs, right? Because the SMEs are the ones that have most trouble sometimes gathering that information because they might not have all the employees needed or the capabilities or the systems in place to be grabbing all this information, and that's something that we have been working on with a particular emphasis.
And I'll just say the real importance of that is, private companies and SMEs aren't necessarily going to have the mandatory reporting. And I agree with your point; it will just become reporting, but it probably will be reported on more in the media just because of the immediacy of not doing anything. But as a vendor to many bigger companies are going to want to know how much carbon emission they're creating because it needs to be inside of their bigger public company's picture and a part of their emissions. So that's why smaller and medium-sized companies are really actually starting to take a big leap into the ESG world.
Right. No, I agree because, like I said, the question that there'll be no separate reporting, but I think if we want to save our planet and we really want to be ethical, we have to measure. And when we measure, we want to report because we want to have accountability. And accountability is huge. So for that purpose, we may have to have a separate section for it, but it doesn't mean to say it's out there, buried under a small department that's kind of just checking a box at the end of the year. Mm-hmm. So you touched on this again, Magdalena. So the question is, what innovation is happening in this area and how is it being funded? And I know IADB Lab is very passionate on a lot of ESG initiatives and we are part of it too. So why don't you talk about some of those? And then I think for you, it'll be interesting to talk about what's happening in particular in the Caribbean region because there's so much going on. So.
Sure. So can give a couple of examples. We just invested in a company, in a startup based out of Peru. They have a platform where they buy from corporations products that are close to the due time or have all packaging, all branding, and they put it on a marketplace and sell it with huge discounts. So we're talking about reduction of emissions, and we're talking about impacting poor and vulnerable populations that can afford different products with a huge discount. That's a fantastic company. It's out of Peru. It's growing in Colombia and Mexico, and it's being hired by so many companies to actually deal with all this merchandising that is getting to the point of expiring or have packaging or branding issues. And basically, this startup is providing the numbers about reduction of emissions, about water waste, and these huge corporations are publishing these results on their website. So you have two ways of impacting the bottom line there. Not only as a corporation, you are moving merchandising that otherwise would be actually incinerated, but you also are reporting about the impact that you're generating environmentally and socially. Couple of examples more. We have been investing in a deep tech venture capital fund in Argentina, as well as I see Laila looking at me. That is not just approved; it's going to be approved. But an agtech fund, a venture capital fund in Argentina that is creating enormous impact in terms of climate. We are seeing this on daily basis. So the amount of opportunities are increasing. However, we do want to see more deal flow regarding to climate tech. I think there's a lot of opportunities there, and the industry is just getting started.
Yeah. We're seeing so much California is having this drought and the problems that you're having. One of the first solutions that we implemented was an independent water supply to the children's ward of the University Hospital of Jamaica. And that is it's a solar panel that creates water from air. And it creates an independent water supply for the children's ward so that if there is a municipal issue, if there is a disaster, their water is completely separate from anything else. And those are the kinds of things the innovations that we're seeing. In St. Lucia, we're seeing a handheld desalination plant that they managed to sell to Papua New Guinea. So just this one entrepreneur creates this solution and then sells it to Papua New Guinea. I was like, what about the rest of the Caribbean, by the way? This small desal plant is something that's really, really useful. We're seeing people take waste like sargassum, which is the seaweed that, I don't know if you know what sargassum is, but it's this seaweed that's proliferating now because of the warming ocean. And taking that and turning it into bioplastics, taking it and turning it into single-use plastics, taking it and turning it into alcohol. And so all of these things, we're seeing such innovation, but we need so much more, and we need it so much faster. So, you know, we're working with a lot of innovators. We're working with a lot of entrepreneurs. We're seeing fintech climate mashups where creating, valuing the ecosystem services that nature provides, so that if you have the choice of selling a piece of land to do a development, or valuing the ecosystem services that the environment is providing, and then floating that on an exchange, not unlike an NFT, that somebody can say, that has value to me, I want to buy it. I want to buy a share, not of the land, but a share of the ecosystem services. And that is creating cash flows for conservation. So we're seeing all kinds of innovation, just not enough, not fast enough.
Send me that one.
Well, that one is in collaboration with IDB, huh?
Fantastic.
Yeah.
I have a bit of a contrarian view on this, I guess. As somebody who's a female founder out trying to raise money for an ESG company, it is very hard. It's very hard. And it's interesting. You know, I think we look around in the room. This room is not really full, and I think like a lot of the big money does not really see the ESG space is particularly lucrative or appealing. And I think that is starting to change, but we have a long way to go. And I think, you know, with celebrity investors getting involved, you know, raising funds, I think, you know, organizations like, you know, what you guys are doing is fantastic, you know, both of you. You know, really raising the profile. I think we have a lot of work to do to kind of raise the profile of these type of investments, and education around the fact that these can be very lucrative investments. Mm-hmm. I think a lot of people see investments in our area as almost like philanthropy. Mm-hmm. You know, they'll kind of, oh yeah, I'll, you know, kick a bit of money to that social good company and see if it comes back. That is not true. There's a section of companies that are hyper growth companies that are focused in this area. So I think, you know, in terms of ecosystem building and things like that, we have a long way to go in terms of really attracting the amount of investment that we need to make the changes we have to.
Absolutely agree.
Yeah, and it's very true, because if they're going to push it under the rug, the train's actually left the station for ESG. It's just a question of how rapidly it's going to pick up speed, and then you're going to be left behind. This is exactly what happened when they started talking about the green economy. And people were like, okay, if I recycle some of my stuff, you know, I'm good. Or I turn off my light when I'm going out of the room, I'm conserving energy. It's far beyond that. And to reiterate, ESG is not CSR. They're two separate things, and people need to understand that. I've had multiple conversations just in a day and a half, or a day now since yesterday. And so many people, when I talk to them about ESG, and they know I had the foundation for Avasant, the first thing they say is, sure, we understand the foundation, and we're very happy to contribute towards your foundation. And I'm like, thank you so much, I'll take that money, but I'm talking about ESG, and you know, this is what you need to understand, what we're trying to do with our organization. So this is why we're having this panel here. As you see, that the track is mostly about technology and innovation and what's happening in the future. But then we also, as a company, see the value add of ESG and how it has to be embedded in every business. You know, and we're creating. We have a whole research team within our organization, and they're creating a whole radar view on ESG and creating an index. And we're going to come out with 2 indexes, which I'll definitely share with all of you. One is going to be from the service provider side of it, and one is for the enterprise side of it. So I have one more question here for you all. How can we build the right org structure and people skills to embed ESG within an organization? Because you and I can talk about it till the cows come home, but if we don't hire the right people and we don't have the right mentality within organizations, how will it take off? So what is your take on it?
Well, I'll just start by saying one thing. I think that ESG needs to be right up sitting at the strategy of the organisation and needs to filter through all the various departments. We work sometimes with marketing, sometimes with HR, sometimes with community relations, sometimes we work direct with the executive's office. But really it needs to go across all of those for a company to really become purpose-driven and really be living these values and really take advantage of the different opportunities that I think ESG will bring. But I'll let you.
What I would say there is, I believe it's also responsibility of investors and partners, right? We need to be asking, what's your impact thesis? And sometimes when we're working with entrepreneurs, with startups, with tech startups, they are thinking about how they are gonna keep the door open next month, right? But it needs to be like part of the conversation when we are analyzing a company, when we are doing an investment, an M&A, debt financing, what's the impact thesis? Because the investors can actually change the conversation and help these entrepreneurs, these innovators, and actually get an understanding of the impact that they are generating and how that actually creates value.
Yeah, I think it needs to be embedded within the organization, and it needs to be your competitive strategy. So what is your competitive strategy? How are you differentiating yourselves? And then what is your ESG strategy as a part of that? Because it's a clear opportunity to win the future. And so the longer your organization takes to come around, and I think it has to be at the C-suite. It has to start there. But I think also wherever you are in the organization, you need to be able to either answer the question, what's our ESG strategy? And if you don't know the answer, then you need to ask the question. Because the conversation needs to happen in order to get the right people answering the question and understanding, listen, if one of our competitors has an ESG strategy, and this is not a cost center, this is a profit center for the future. This is how we ensure the sustainability of our business. This is how we ensure the sustainability of our lives. Anything else that we talk about, if we're not talking about this also, it doesn't matter. Mm-hmm. So we have to ask and answer that question.
Right. Do you have something to say, Dale?
Absolutely. And I think, both of you are spot on. I mean, this is just about leadership, and if we break it apart, theory of transformational leadership, it's about charisma, it's about somebody, sharing a charismatic vision about how, and, about talking about how important it is and a vision for the company. Yeah. It's about going to the individuals and talking to them, understanding how that they're going to be able to bring it about in their departments. It's about measuring impact. So I think, it really is a question of leadership about bringing this about.
I agree with you. I think this is one of those where it is a top-down approach. It has to come in from the leadership. It has to be embedded, and everybody has to take ownership to be able to execute ESG within organizations. So we have about 2 minutes and a couple of seconds left. I would like you all to take about 45 seconds each instead of doing a rapid run. What do you want to leave this conversation with? What do you want people to take away when they leave this room?
Mine is very simple. If you're not thinking about ESG, you're late to the game.
Write it down in bold letters.
Yeah, I think it is, yes, it needs to be at the leadership level, but if it isn't at the leadership level, we are all leading from our individual perspectives. So understand, it's not somebody else, somewhere else. Nobody's coming to save us. We have to save ourselves. And so if no one else is having the conversation, you're the one to start it. Congratulations, it's you. You've been appointed. So start the conversation, understand what the strategy is, and execute.
Exactly. Dale?
And I think this session's about hypergrowth through ESG. So I think, just kind of really directly addressing that. To get to growth, you need to move past measurement and past reporting to engagement. Meaningful engagement in your customer and your employee and strategies. And then once people are engaged, that's when they'll start having that really strong buy-in, and you will start seeing results in terms of them opening up their own pocketbooks and being huge advocates for your organization. So, that engagement is absolutely key for profitability.
And I think the last bit I would say is that ESG, it goes across all spectrum, right? So it's from any industry you think of, ESG has to be embedded. So it's very exciting, and it's also very interesting because you can have such amazing initiatives based on what your organization wants to do. So it's not like you need to say, oh my God, this doesn't align with our mission or values. It aligns with any business. So you just have to think about clever ways of embedding it, getting it started, and then getting everybody motivated to run with it. So with that, I would like to thank our esteemed panelists, and thank you all so much for participating with us. Really appreciate it.